This is a short introduction on lease accounting. And I've produced 11 videos on lease accounting. Now that sounds like a lot, but I've broken up lease accounting into very discrete components, and the videos themselves are not that long. Now, the reason I've spent so much time in creating videos for leases is this is a part of the exam under FAR that has traditionally been heavily tested. So I wanted to make sure you had a good background in it. Now, if we take a look at the videos that I've created, you see the introductory video, which I have, which you're reviewing right now, and I have 10 other videos about different topics regarding leases. Now, the best way to view these videos is in the sequence it shows right here, because there are some videos that build on other videos, and it would be helpful to go through those videos first. For the most part, each of the videos has at least one or more multiple choice questions that you can practice accompanying the video. So let's go ahead and start and with the introduction and talk about leases. And the FASB back in the late 70s created generally accepted accounting principles, or GAAP, regarding the accounting for leases, because leases were a very much to be abused form of accounting back prior to the FASB pronouncements. Now, a lease is basically a long-term contract where one party, and that's the lessor, in effect the creditor, conveys a right to another party, the lessee, who is the debtor, to use a specific asset for a stated period of time in exchange for a certain number of payments. Now, GAAP permits leases for both lessors and lessees to be accounted for under two separate categories. Now, you just can't pick which category you want to account for these leases under, because each category requires specific criteria for its inclusion within the category. And once you're within the category, each category requires different methods of accounting. The two major categories include we call capital leases, number one, and number two, operating leases. In general, capital leases are accounted for as if they were a long-term purchase and financing contract. Operating leases are accounted for as if they were a long-term rental agreement. So we're going to use those concepts when we talk about accounting for a capital lease or an operating lease, whether you're a lessor or a lessee. Now we're going to start off with some basic terminology regarding leases, and we're going to look at it from the lessee's point of view. We have four major components that make up what we call minimum lease payments. And remember, the lessor is a creditor and the lessee is a debtor. And right now we're talking about the components of a lessee's minimum lease payments. So, first of all, one of the components is what we call the minimum rental payments, and that is a minimum periodic rental payments owed by the lessee over the life of the lease. Now, don't get them confused with what they call executory cost. The executory costs are excluded from the minimum rental payments, so that's not included in the minimum rental payments. These type of costs include the cost of things like insurance, maintenance, tax expense, all these items related to the leased asset. They're not part of the minimum rental payments. Another major component, potential component of a lease payment or minimum lease payments would be what they call the BPO, or the bargain purchase option. And this gives the lessee the right to purchase the leased asset at a price it's significantly below its fair value at the date that the BPO, the bargain purchase option, becomes available. In other words, you'd be crazy not to purchase that particular item because the price is going to be significantly below that. Number three, guaranteed residual value. Sometimes the leasee guarantees all or part of the fair value of the leased property to the leaseor at the end of the lease. And what we're really saying is that I'm going to guarantee you this particular leased asset is going to have a value of, let's say, $10,000. If for whatever reason it has a value of $6,000, I have to make a final lease payment called the guaranteed residual value. In that case, it would be $4,000 because you're guaranteeing to the lessor that that property will be the guaranteed value at the end of the lease. There's lastly, then we have what we call a non-renewal penalty, and this is a penalty that is paid if the lessee elects to not renew a lease or extend a lease at the end of the lease period. So this is called a non-renewal penalty. Now again, all these four items are a very important component of minimum lease payments. Now, let's go on and take a look at the one multiple choice question we have for minimum or for lease payments. And the question is, which of the following costs would not be included as a component of a lessee's minimum lease payment? You're given four separate answers, and based upon your selection, go ahead and make your selection, stop the video, and when you're ready, restart the video. Okay, let's take a look at the answer to number one. And the question again is, which of the following costs would not be included as a component of a lessee's minimum lease payment? In this case, the answer would be C, annual taxes and insurance paid by the lessee on the leased property. If we go over the answers here, A, the amount of the A is the amount the lessee has a right to purchase the leased property for a price lower than its expected fair market value. That would be considered a bargain purchase option component, and that would be part of the minimum lease payments. B, a required payment if the lessee fails to renew or extend the lease. That would be a non-renewal penalty. D, at the end of the lease, a payment to the lessor for the difference between the actual fair market value of the leased asset and the guaranteed value. That would be the guaranteed residual value. So in this case, it would be C, regarding the executory costs. So that is the end of our presentation for our introductory video. And our next video, I'm suggesting the next video you may want to review would be leases, which would be the lessee classification of capital or operating leases. Thank you very much for your time.